Hello and welcome to another. In today's class, we will move on to the next question. LAQ 12. What are the various methods of calculating national income? Explain them. That is the measurement of national income. Okay. So this question is also from the Unit 7 National Income Analysis. Okay. Now this is a very important question from the point of view of the board exam. If you check the previous board exam papers, most of the times you could have noticed that this question has appeared in the board exam. For example, even in the March 2023 board exam also this question has appeared. Okay, so the measurement of national income. In the previous answer, I explained to you what are all the various concepts of national income, what is the meaning of national income, and also what are all the various concepts of national income. Okay, so in order to arrive at the national income, we have to calculate, isn't it, how to calculate the national income. So basically there are three methods to calculate the national income of a country. Okay, so before proceeding, first you have to write the introduction, which is nothing but the meaning of national income and the definition given by Cain-Cross. Okay, so the meaning, in the previous class itself I have already explained to you what is the meaning of national income and what is the meaning of the market value of goods and services, isn't it? So we are just mentioning the introduction, the meaning of national income. Okay, so coming to the answer, national income is the total market value of all goods and services produced in a country in a year. We have checked out, isn't it? I have explained to you how we calculate the market value, that is price into quantity. Okay, so there are three methods of measuring the national income. The first one is called as the output method or product method. Second method is the income method, and the third one is the expenditure method. See, each and every one of these methods have certain advantages. Okay, so coming to the definition, according to Cain-Cross, national income can be looked in any one of the three ways, as the national income measured by adding up everybody's output, that is the output method or product method. Then by adding up everybody's income, that is income method, and by adding up the value of all things that people buy and adding their savings, that is the expenditure method. Okay, so first then we'll check out one by one how to calculate the national income based on each of these three methods. So the first method is the output method or product method. Okay, so the other names for output method or product method is, it is also known as inventory method or commodity service method. So these are all the other names for output method or product method. So in this method, the entire country is divided into different sectors like agriculture, industry, government, professionals, etc. And the market value of output in each of these sectors are found out by multiplying the final output with their respective market prices and added. Say for example, you divide the entire country into agriculture, industry or tertiary sector. Now what we do, whatever the output produced in the agricultural sector, so that output, so many varieties of commodities are being produced in agricultural sector, isn't it? So let us take agriculture for example, let us assume agricultural sector as 1. Okay, so the output produced in the agricultural sector, that is quantity. So quantity 1, so this 1 includes so many other all the commodities that are being produced, cultivated in the agricultural sector. So all those quantities multiplied along with the prices of each and every one of these commodities, that is price of 1 multiplied by quantity of commodity 1. So let us assume for the time being this 1 belongs to the agricultural sector, so that is P1 Q1 plus P2 Q2. So for the time being, let us assume 2 represents all the commodities that are being produced in the secondary sector, that is the industrial sector. So what is the quantity produced in the secondary sector? All the commodities separately, each and every one of the commodities that come under the category of secondary sector. So together let us assume all those commodities is referred as 2. Okay, so the quantity, all the quantities of each and every variety of commodities that are being produced in the secondary sector, that is Q2, multiplied by the price of each and every one of these commodities in the secondary sector, P2, like that, so on. So then up to PNQ1. So add all this, and plus if you add even the net income from abroad, we are arriving at the gross national product. Okay, so that's the formula. GNP is equal to P1Q1 plus P2Q2 plus up to PNQ1 plus net income from abroad. So where GNP is the gross national product, P refers to the prices of goods and services, Q refers to the quantity of goods and services, and 1 to up to N or the various goods and services produced in the country in a particular year. Okay, so that's you have in each and every one of these methods some caution has to be taken. So what caution here? It has to be noted that only the value of final goods and services should be calculated. The values of intermediary goods and services should not be included, because if you are taking the intermediary good as well as the final good, then we will be calculating twice. For example, if you are calculating the textiles, the production, the total value of textiles, so either the final garment, final fabric we have to take, or we have to keep on adding from the cotton, then the yarn, then the fabric, then finally what is the value added at the final stage. But on the other hand, finally if you take what is the value of the garment at the final stage, okay, and you also include at the intermediary stage, that is the raw cotton. So if you are including at the raw material stage, if you are including at the intermediary stage, and if you are also including at the final stage, then it will be equal to double counting. So we are adding 2 times the same commodity. So once you are adding in the form of calculating in the form of cotton, and again you are calculating in the form of final textile, then because in the final textile, final garment, already the value of cotton is included, isn't it? So if you are, once we are taking the value of the cotton, and again we are taking the final value of the garment, that is the textile, then the cotton value is calculated twice. So then that will show a wrong information, that is the national income will show an increase. So that is equal to double counting. So that's why it is mentioned that it has to be noted that only the value of final goods and services should be calculated. So the values of intermediary goods and also at the raw material stage should not be included. Okay, so this is the output method or product method. Then the second method is the income method. So the name itself suggests that calculating the adding up the incomes of all the factors of production. Okay, so in this method, the incomes earned by all factors of production are added to arrive at the national income. So this is also known as national income at factor cost. If you remember, we have come across this concept in concepts of national income, isn't it? The national income at factor cost. So I told you it is equal to cost of the factors, that is the rent, wages, interest and profit. So if you add all these incomes, factor incomes, we will arrive at the national income. So national income is equal to rent, the total plus wages plus interest plus profit, that is total rent of the country, total wages received by all the laborers in the country, total interest received by all the capitalists in the country, plus total profit earned by all the entrepreneurs in the country. So this will give the national income of the country. In this, if you want, you can add the net income from abroad, you will get the net national income. Okay, so here the caution is care should be taken to include only the net incomes and not the gross incomes. So gross income, only the net income earned by each and every one of these factor of production should be taken into account. We should not take into consideration the gross incomes. So to put it very simply, gross income minus all the expenses is the net income, isn't it? So net income only should be taken into consideration, not the gross income. Then transfer payments should not be included. Why we are transfer payments or the old age pensions, the scholarships, unemployment allowances, they all come under the category of transfer. Donations, charity, they all come under the category of transfer payments. So transfer payments should not be included because the people who are receiving this kind of incomes, they are not contributing anything to the national income of the country. So that should not be included in the calculation of national income. And this method gives us national income according to distributive shares. So distributive shares in the sense, what is the share of rent in the total national income, what is the share of wages in the total national income, what is the total share of interest in the national income, etc. So this gives one of the very important informations. See, suppose for example, out of the total national income, if the share of the total wages percentage is more than the other three, rent, interest and profit, that gives the information that the national income of the country is evenly or equally distributed. Because in any country, the people who are earning wages are more than the other three categories of factors. Okay. On the other hand, if the share of wages in the total national income is lesser than the other three factors, that indicates the national income of that particular country is unevenly distributed. Okay, so this is the distributive share, the shares of how the national income is distributed, what is the share of each and every factor income in the total national income. That information can be got from the income method. Okay, and the third method of calculating the national income is expenditure method. So the name itself says the expenses incurred by each and every category, each and every sector. Okay, so when you add all these, the expenditures of all these sectors, we will again arrive at the national income. So expenditure method, in this method, the expenditure incurred by various sectors on final goods and services, again should not be on the intermediary goods or should not be on the raw materials, it should be only on final goods and services. Because when we say final goods and services, the value of the intermediate, the expenditure incurred on the intermediary goods, the expenditure incurred on the raw material stage, all those things are included in this. In a particular year are added, which is equal to national expenditure. So we are assuming, it is assumed that national expenditure is equal to national income. So the formula is national income is equal to expenditure of household, that is EH, plus expenditure of firms, EF, plus expenditure of government, that is EG, plus net export, that is exports minus the input, whatever the extra income, foreign exchange surplus which we are getting after deducting the payments for imports, that is the net exports earning. Okay, so thus these are all the various methods of calculating the national income, and all three methods should give the same result because we are calculating the same thing. It is only the national income. So either we can calculate in the product method, we can calculate based on the income method, or we can calculate based on the expenditure method. So the final result should be the same. Okay, but for your information, this expenditure method, no country is following this expenditure method because it is very difficult to get the data about the expenses incurred on final goods and services from various sectors. So it is very difficult to get the information on expenses. So expenditure method, none of the countries are using the expenditure method. And as far as income method is concerned, most of the developed countries, they depend on income, they use income method because the most of the people, they pay their income tax, so their incomes are registered, there is a record. Okay, so in those countries where the income earnings of the majority of the people are almost 100% of the population who are earning, their incomes are registered, then it is easy to use the income method. But whereas countries like India, where only very less percentage of the population, they are paying the income tax, so the majority of the people, they are employed in the unorganized sector. Okay, so it is very difficult to get the information regarding the income. So as far as India is concerned, we are using the combination of both the output and product method and also the income method. So for the agricultural sector and the secondary sector, we are using the output and product method, and of course service sector, it is we have to use the income method. Okay, so in the industry, with this combination of both the income method and the output or the product method, the national income of India is being calculated by the Central Statistical Organization. And also there's one more information you these three methods can provide is, see, based on the output method or product method, we will get the information that which sector is contributing more to the country. Because output method, it is the entire country is divided into different sectors: primary sector, secondary sector, tertiary sector. So if the contribution made by the primary sector to the national income is more, then that indicates that country is still in the developing stage, that country is an underdeveloped country. But if the contribution made by the secondary sector or even further tertiary sector is more to the national income, then that indicates that particular country is a developed country. Okay, so that information can be got when we look at the data, national income data, through the output method or product method. And income method, I already explained to you. If the share of wages is more, then the national income of that particular country is evenly distributed. If the share of profits or rent or interest is more and the wages are less, then that particular country's national income is unevenly distributed. Okay, so these are all the various methods of calculating the national income. Okay, so I hope all of you have understood the answer. If you have any doubts, you can mention that in the comment box. Okay, so otherwise, if you find this video useful, please like, share, and also subscribe to my YouTube channel. Okay, so until my next class, take care. Bye bye.